Hey guys, it's Nicholas. I hope you're having a fantastic weekend so far. It's Sunday afternoon here in the UK, and finally, we're getting around to doing our first trade breakdown video of 2022. I know it's been a while since the last one. Obviously, towards the end of last year, near to the festive period, then I'd wrapped up my trading for the year anyway, so I didn't have anything to share at that point. And this first month of the year has been really busy. Now, you might be thinking, I don't normally send these on a Sunday, they're usually midweek, and that's true. The reason I'm sending this now is because it's right at the end of the month. Monday's the 31st, that'll be the last day of January, so I didn't want to miss sort of the January trade breakdown. And I put out a video on Friday on YouTube about the FTMO challenge, and I promised that I'd send a video to the mailing list this weekend explaining some of my trades that I took during that challenge. And so I didn't want to disappoint, particularly as a lot of people signed up for the mailing list, I guess specifically for this video. Now, this one's going to be a little bit different to usual. For those of you who haven't seen these trade breakdown videos before, what I'll usually do is midweek, I'll send a video where we'll look at one trade and break it down in quite a lot of detail. Whereas in this video, it's going to be a little bit different since it was for the FTMO challenge. I want to go through 4 trades. And so because of that, we won't go through it in the same level of detail as what we usually do. Instead, I want to go high level, point out a few key bits from each trade. And the main thing is talking you through the overall approach. I have said that at some point in the future, I will go through specifically all the details of the approach and the strategy I used for passing that first FTMO challenge. But I want to wait until the second one's passed, until we're funded, and then I'll talk you through it all. But for now, I'll talk you through sort of the high level major details of it. So the first thing to keep in mind is that I had to change my strategy to pass this challenge. With my usual trading, then of course some months I'll be above 10% return, but sometimes, well, a lot of the time you'll be under that as well. So if you want to make sure that you don't leave it to chance and you want to definitely be above the 10% return that was necessary within 30 days, which is quite a short amount of time, then you have to be a bit more aggressive and approach opportunities in a slightly different way. So I couldn't just stick to my usual trading and hope that there'll be enough opportunities to get above the 10%. I instead had to go for things being a bit more aggressive. So I returned to more of an active trading approach. Now, with active trading, with trading in general, there are like 2 aspects to your trading. There's the explicit aspect and the implicit aspect. So your explicit aspect is to do with, your system, your rules, your strategy, the things where you could describe to someone what it is that you're doing. Then the implicit part is what you pick up from the markets. This is from experience, and it can be experience that you develop over the long term, like little bits and pieces that you pick up on, feelings that you have in the market. And it can be short term, which is why I always encourage you to follow one market at a time as much as possible, is that you'll pick up on little nuances in the market, where the price is struggling with a particular level, when activity is changing, when the market dynamics have shifted a little bit, when there's more momentum in one direction than another, and you can tell that the trend's going to be continuing to push through. Now, having a feel for the market, a lot of people think is sort of like a wishy-washy kind of concept and probably isn't true. But actually, it's been proven in studies that we do pick up on these sorts of things. I think it's SRT studies, is it serial reaction time, I believe that stands for. These studies show us that we can pick up on sequences and patterns in the market, the ones that we can't necessarily describe, or it's like an unconscious processing, even when it's mixed in with randomness in the market as well. So when you're more short term, you have to rely more on implicit than explicit. So no matter what trading you do, you're relying on both, but the more short term you're trading, the more it goes to implicit. And I had to rely on that a lot. So I went really active with my trading, and what I was doing is looking for similar opportunities to what I normally would, but kind of filtering out a lot of the opportunities so I could look for the opportunities that were at real extreme points in the market. Now, fortunately for me, the markets have obviously been quite volatile over the past week, which has pushed a lot of the markets into extreme points in the market, sort of new lows, new highs, things like that. And those are the sorts of opportunities I was looking for, because then I would enter the opportunity with a relatively smaller amount of risk compared to what I was going to be looking for, even though it would be a bit of a risk if I'm at an extreme end of the market, because the price could just push straight through, which is what happened with my first trade. So I started off with a losing trade, even though I'd spent the month up until that point seeing nothing but profitable opportunities. It was just sod's law. But looking for those opportunities, entering with that smaller position size, having a plan for scaling in, because most of this was going to be as a result of scaling in aggressively, and then using the sort of implicit factors, following what's happened in the price to understand the right time to execute those scale-ins and when to get out when things are turning against you. At some point in the future, I'll talk you through that entire approach, the scaling approach and everything. But for now, I'll just talk you through the opportunities. And there were basically there were 6 key opportunities. The first one that I lost on, that was a key opportunity gone. And then there were 5 that were profitable ones for me. I'll go through 4 of them, starting with WTI. Now, my first trade was on the 18th. This WTI trade was on the 20th. The final trade was on the 25th. That was the New Zealand dollar one. But let's start with this one. So it was this weekly candle here. Now, we'd pushed through this double confirmation, but it was basically that I was looking for short trades despite everyone being bullish, everyone saying it's going to $100. I knew it's going to struggle around here with this double confirmation. Now, with the Duomo method, for those of you that are new to it, I'm sorry that I'm explaining so many things, but I want to make sure that everyone's got the context around what we're doing. With the Duomo method, actually, context is the key word. We have a context-based approach, which means that every candle that moves, every wave there is in the market changes the context in some way. There are 3 aspects to context. There's significant levels, structure, and the triad of price action for us, which is like the micro strategy, the micro aspects. And so the context changes how we'd approach the market. When we adjust our significant levels, our tools, like trend lines, for example, swing high lows, everyone's familiar with these things, but the key is how you confirm the positioning of those levels. There are certain clues we can pick up on in the market that allows them to be confirmed in the right way so that they're really, really precise then. And the way that we approach them, how we trade them, when we trade them. That comes down to the context and the way that the candles interact those levels and show us that it's a time that we can enter a trade or exit a trade, scale out and so on. So I knew it was going to struggle around here. So that was the basis of looking for a trade here. Also, we were around this daily swing. It's kind of a similar level, but you can see it's been interacting with both sides. So I knew it was a high activity level, and that's what I needed. A high activity level. We knew from the sort of inventory data that was coming out that the situation for oil wasn't as bullish from a supply and demand point of view as the market was appearing to be, as it was around this area here. But there's obviously a lot of concerns with the Russia and Ukraine situation. So I was looking for short trades, and for a specific reason, and it's what I mentioned on my live stream trading session with our members on, I think it was the day before. So this trade was on a Thursday, the live stream session was on Wednesday. And by the way, I have mentioned before, but I just want to remind you, we're closing the doors to new members at the end of the month. That's tomorrow, Monday is the last day if you want to join, and it's not a temporary marketing thing. We're genuinely closing the doors for good. It's a decision we've made, a long-term decision that we think is better for us and our community if we end it there. So you've got one more day to join if you want to. The reason that we're giving you to the end of the month is that we could be fair to anyone that hasn't had the chance to join yet or wants to join but has been on the fence. Now's your chance to join. We're not going to be taking on anyone after that date. So in that live stream, I was explaining that the structure had been condensing. And what that means is that although it was still bullish, higher highs, higher lows, and so on, I wouldn't want to look for the bullish trades until the structure starts to open up more. And instead, if we could look for short opportunities, that would be a chance for the structure to be a bit more open, and therefore we could get higher quality opportunities there. So what happened? We broke this trend line at this point around here, and that was an early sign that something had changed in the trend, okay? And that's not necessarily a bearish sign just yet, but it means that something has shifted in the bullish sentiment. Now, with the Duomo method, we're never trading on strength in a trend. We're always trading on the opposite of that. We're trading against weakness in a trend. What that means is that as this is like heading up here, if I was going to trade long, I wouldn't be trading long because I think it's a strong trend. I'd wait until I see weakness in a possible bearish trend. So I'd wait for signs that as it's pulling back, it's not able to, and then I'd be going long. Likewise, if it breaks here, seeing that there's like this sort of the start of a bearish move, I don't want to trade that because that's just showing me that there's some sort of strength in a bearish move there. I want to trade when there's weakness in a further bullish move. So the first chance of that is up here. Didn't enter there. Then we start to head up a bit further, and around here, it was actually a fairly risky entry. But like I said, I was willing to go for riskier, more aggressive entries with a smaller position and scale into it aggressively after that. So we can see that we had pushed strongly through both the trend line, testing it from the other side, and the swing high. And this being like, it's not an all-time high, obviously, but you have to go very, very far back to find where it's been at this price before. So it's a very, very strong level at this point because it's pushing to new highs if it gets through there. And you could tell from the way that it pushed through and the way it was pulling back that something had triggered in the market. I told you already from the inventory levels, I thought that it was a bit too soon to be pushing up that high. Obviously, it pushed up higher a bit further, like the week after. But I was looking for an opportunity here. Now we can see it ends up closing as a type 2 on the trend line, type 3 on a swing high. So that's an entry on its own. But I actually entered 15 minutes before. And let me find where it is. Obviously, lots happened in the market since then, so it's a bit of a mess after that. But we had failing at the unconfirmed trend line, wasn't that meaningful for me. But closing as a type 2 on this swing. And you can also see this is not confirmed. Okay, it's not confirmed, but it's a logical Fibonacci range, failing at the 161.8. And although it's not confirmed, it was close to, like, it felt confirmed because of what we refer to as the inner structure confirming it for us. But the C point's not confirmed, so it wouldn't have been a part of a double confirmation. The other factor that you probably look at here if you're used to the Duomo method is that there's a very long wick on this candle. It could be testing from the other side. It could also be setup completion. Triad of price action could be on the risky side. However, when I was looking at the volume at the time, volume wasn't that high for the size of the move, which means that when that happens, we register that as an anomaly in the market, and that makes us sort of question the normal variables that we look at for, you know, stopping us entering a trade. So I was willing to take a risk there. Of course, initial entry stop loss would be above the wick there, and then the scalings came after that, and you can see it was a pretty direct move. So that was that first opportunity, and you can see that as we started to move down, the sort of moves lower, other than consolidation here, they're quite direct. This is what I was looking for with these opportunities, because when you go through an extreme in the market, either you're going to get wiped out straight away, or if it is going to be heading like in the direction that you wanted, then it's going to be moving quite strongly and quite quickly with quite a bit of momentum a lot of the time. Now, for my typical trading, that's not what I want to be trading, because I believe that over the long term, if that keeps playing out over and over again, eventually I'll end up losing, and losing more than I'd gain. So I think that over the longer term, there's a negative expectancy. But over the short term, the 30 days that I'm trading for, there's more of a positive expectancy. This tends to be the case when you're trading setups that are high probability, is that, you know, you'll go on a winning streak short term, but it's a matter of time before the big losses come in. That's very much the case here. But if you're going for a 30-day challenge, rather than what we normally do, which is sacrifice the short term for the long term, so short term you can take small losses and be okay with a drawdown in order for long term your profitable trades to wipe that out. That's asymmetric risk returns. For this challenge, I was doing the opposite. High probability, sacrifice long-term performance for short-term because you're being challenged on your short-term performance. Hope that makes sense to you. As I said, we'll go through it all in detail at some point in the future. And if you're one of our members, I went through it all on the live stream last week. So let's move on to the next opportunity. It actually came shortly after this one, and it was on Euro Aussie dollar. So this was one that actually on our live stream the previous day, one of our members, Will, had pointed out to me, and he had entered the trade at a different point in time on it, and that one had ended up hitting stop loss. But as it continued heading through where his stop loss was and headed lower, it ended up being an opportunity for me. Now that was on the 20th, so in terms of the daily candles, you can see it's this unconfirmed trend line that I'm not that convinced by, but on the daily, it's this candle here that had been pushing through what was unconfirmed before. And the whole point was to trade it back to close above it, since it's also interacting with structure here. It's like a double whammy of structure and significant level. It didn't quite get there, but if it had gone any further, it would be breaking structure and showing weakness in the bullish structure that we started to form. So I thought, okay, strong area for it to push back up from there. I was looking at a trade right at this bottom wick, the bottom of the wick, to trade it back up above there. Only a short-term trade. All of these moves, I wasn't looking to hold in for a long time. I was looking to get in, scale in aggressively when we get that instant reaction, and then get out as quickly as possible with a few percent return or whatever it is that I can get from it. So really short-term performance. Okay, so for this one, let me just... okay, so this 4-hour candle, the bottom one here, this hadn't closed yet. So it was during this one, and actually the entry came on the hourly. We had this unconfirmed trend line across the bottom. Although it's unconfirmed, it's close to being confirmed because of the consolidation that was happening in these areas. Along with that, we do have a confirmed Fibonacci range, and we have the 161.8 down here. So you can see the initial candle here closes as a double confirmation. I didn't actually enter on that one because I was looking at the triad of price action, seeing that we'd had like quite a lot of momentum heading down through here, understanding that on the higher time frames, we had already broken through the path of resistance and we're heading towards structure. What I wanted to do is make sure that that momentum runs out. Remember, I'm trading weakness in a trend, not strength in a trend. When we hit this significant level, sometimes it can slow down this trend, but doesn't mean that we're going to have that move in the opposite direction. So I waited for this doji candle here, and this time, rather than just opening the small position size that I was doing before, I went even smaller, and it was actually a probe trade. And a probe trade is different to a small trade because a probe trade, you calculate the total risk for the full position and then open part of it because there'll be another factor that you want to, another uncertain factor that you want to have wiped out before you'd be happy to open a full trade. And in this case, it was the 4-hour swing around this area here that I wanted to make sure that that wasn't an issue, that the price wasn't going to be attracted to it, since we know significant levels attract and repel the price. So if it was going to be attracted down there, that would be a risk for me. So I'll open the probe trade now, and once that risk is out of the way, I'll scale in. So you can see what ends up happening. This next candle actually went down, and with a bit of tolerance, it was at this swing. So this is the minor swing. You can see it's been relevant in the past as well. So kind of like a type 1 with tolerance. It wasn't about that 4-hour. It was just about that risk being out of the way. So I scaled into the full position on this candle here. And you can see the most direct move you can get. Now, I have to say, because I want to be completely honest about all of this, my trade management here, I did my scale-ins at the start. If I had stayed in the trade and not done anything, then this alone would have been enough for me to complete the challenge because of the directness and the size of the move. However, I exited later that evening, so I only picked up a very small portion of the trade. It was in line with my plan and my strategy for how I was going to be approaching this challenge. But I do have to say that my trade management could have been a lot better. Probably if I was outside, if I wasn't in a challenge mode. I mentioned in that video on Friday that there were all kinds of psychological factors at play, and it definitely affects my decision making. So just want to be completely transparent because it looks like these are amazing opportunities and you might think that I captured all of this. I did not, unfortunately. Well, I mean, it doesn't matter anyway. I passed the challenge, so there you go. Next, dollar franc. Okay, so this one, let's start from over here. So we had this reversal zone for a long time. It's basically a bottom of a range, and my entry on this one was on the 24th. So it was the day before, the final day of my, before I completed the challenge. This contributed to it, and I was right at the top of the reversal zone looking for a long opportunity. So on the 4-hour, it was actually, which one was it? It was this candle closing on this unconfirmed trend line. So it was the start of this move up from here. But that wasn't sort of the most important thing. Just trying to find where, I believe it was around here. So we have the minor swing. We have the unconfirmed trend line that you could argue and say it was confirmed, but this didn't quite confirm it properly for us. And it clearly had run out of momentum there. As well as that, just the fact that it's at the bottom of that really strong range, whether it's a reversal zone or not. I thought, okay, I know exactly where the risk needs to be, below sort of where it pushed through the reversal zone before. If it moves straight through there, okay, I'm willing to accept that, but I will make sure the position size is small enough and the stop loss is wide enough that it can fluctuate around there. And as soon as it gets on the move, since I know how the price reacts in reversal zones, then I'll be able to scale in strongly. That's exactly what I did. And that was quite a straightforward opportunity. And then later on that same afternoon was another opportunity on pound dollar. which, okay, things have changed since then, but we were at the 50% of this range. Obviously, when it's a direct range like this, that's when we can use the 50%. No other time. You can't use the 50% on an indirect range where, for example, like let's say that you do one like this, okay, going across here, you wouldn't trade that 50% level, only because, I mean, you can see it actually reacts towards at the 50% level there. But the only reason you wouldn't use it is because you're not sure where your A and B points are. So typically with our Fibonacci ranges, we don't trade the retracement levels, we trade the extension levels. And the reason is, if you trade the retracement levels, you can't confirm where your A and B points need to be. You can't confirm where that range needs to be anchored to. However, if you use the retracement levels to help confirm it, so you use failure at the retracement levels as that's going to be the C point, so now you know where the A and B point is, then you could trade the extension levels. But when we have a direct move like this, we can use the C point because there are very few alternatives then. And the C point is not a Fibonacci level. It's not in a Fibonacci sequence, not a Fibonacci level, or it's not calculated by the Fibonacci sequence. It's part of a different theoretical basis, and you can trade a direct move from there. So in this case, when was it? It was the 24th as well. So it was this, where is it? Let me zoom in. 24th. So it's this one I pushed through. So we're looking at it failing at the 50% level. As it's approaching this swing low, I think, okay, if it's going to go any lower and hit that, then it's going to struggle. So in terms of like risk, I know that I've got that backing me up, like a backstop there. Not sure what we have on the weekly here. Not much. These need to be updated. So then the opportunity was starting with the 1 hour, and it was down here. So we can see that we've got a confirmed Fibonacci range. We closed the type 2 at the 161.8 and type 1 with tolerance, or you could call it type 3, based on this swing that's been relevant a few times in the past. However, you can see it's a long wick. Triad of price action would make this a little bit of a worry for us. So the next one that comes down and closes as a type 2 there is even better. So it was really precise there. And that was around this area down here. So you can see as well, oops. You can see as well how precisely it's failing at that wick there. And actually the next day it came back down and failed in the same area again, but I wasn't sort of picking up on it at that time. So actually this one was a lot more focused on the short term. There was a bit more to the trade management. It wasn't a straightforward one, but obviously this was quite a few days ago now, and a lot of that analysis has been removed from the chart. But it was basically looking for this extreme down here. We have that double confirmation from the Fibonacci, the swing, which is waiting for the triad of price action to show us that is not as risky. Because if you think about it up here, in terms of risk reward, then you have to sort of give a lot more space for it, and then you're going to eat into your possibility for scaling in and stuff. From down here, it was basically we waited for the initial move. We were out of it by evening time. We only need to have like a 30 pip move or something like that. So those are some of the opportunities. I just wanted to point out really this sort of how we waited for the extremes in the market. I say we because this trade was one that me and Connor both took. But it's really about the scaling in. This is not an approach that I would normally take for my long-term trading. I think that you're at risk of really sort of being on the wrong end of a big, severe move in the market where it can go through your stop loss, especially the WTI one, I think, was particularly on the risky side. But it was all part of a plan, and actually the timing of all of these things for the markets to be as erratic as they were at the time of me doing this challenge worked in my favor. So I completed the 10 days over the weekend. I didn't realize that you could also use the weekend crypto markets to complete the 10 days minimum trading time. So I've passed the challenge. The next one's ready to go. I've got the credentials for the next account. So tomorrow, Monday, I'll be already looking out for opportunities to kick off that one. I've got to make 5%, I think, in 60 days. Should be straightforward, even with just regular trading. So I think that I'll probably take a scaled back approach, not so risky, not so aggressive, a little bit more conservative. And hopefully I'll report back to you that I've passed the second one, and we can move on to sort of trading on the funded account and seeing how the whole withdrawal process works with FTMO. All right, guys, so have a great week next week, and I'll see you in the next trade breakdown video. Take care, guys.